Hey everyone, it's Friday, May 9th. Here's your mortgage rate update. Okay, the big event this week was the Fed meeting on last Wednesday, which I did a report on. There really weren't any other market moving events this week, other than there was a productivity report that came in below expectations. The big event mentioned this week is the tariff-related meeting in Switzerland this weekend between Chinese and U.S. officials. Treasury Secretary Scott Bessent and U.S. Trade Representative Jamieson Greer will be meeting with Chinese representatives, potentially paving the way for broader trade talks going forward. Regarding mortgage rates, they've been moving in a sideways pattern for the most part in recent weeks, but this can be seen as a sign of strength as the major stock indices have all been rallying big time and have erased all the losses following the Liberation Day declaration on April 2nd. In other words, the risk on trade has come strong with stocks, but it hasn't been at the expense of the bond market selling off. This is a huge sign of stability for bonds and mortgage rates. One possible reason for this, the Fed's starting to buy Treasury bonds again. Hopefully what I just said makes sense. With this said, at the risk of sounding like a broken record, 30-year fixed rates are still in the mid to high 6% range. So we will see how the markets respond on Monday to this week's trade tariff talks in Switzerland. Take care, everyone. Enjoy your weekend.